So today we're going to talk about the new inflation data that has come out and shows that inflation once again is dropping rapidly. Before we get into that, I just want to speak about PayPal. I know a lot of you guys wanted to see a PayPal video and I will get that done for you later. Work is just absolutely crazy at the moment, so I've not been able to do the full financials yet, but as soon as I've gone through the full financials, when I've got a few hours free, I will then put the PayPal video for you together and we will do that. Before that, let's just talk about the new inflation data that's come out. Once again, inflation is dead. It is dropping rapidly. As you can see here from the CNBC article, inflation rate eases to 4.9% in April, less than expectations. And this follows on from what we had in the last month, where the consensus was to be 5.2%, and it came in at 5%. And last time, in the last inflation data, we dropped from the whole 6% down to 5%. And even at this point here, we were expecting 5% and we came in at 4.9%. Once again, lower than expectations. And this was really good because this was in a time frame where we saw a lot of oil prices have a little bit of a jump up through this month, and we were a little bit worried if we were going to see a slowdown, but we still came in lower than expected, and the downtrend has been continuing. And you look at this rapid descent here, this is really good. Now if I have a look here at the actual data, and you see here 4.9%, there was only really two big spikes. First of them being what we expected, gasoline. Gasoline was a big jump, as you can see here, and the second was used cars that had a bit of a jump here. Now, gasoline was to be expected, and this should sort of level out in the next inflation data, and used cars as well should start leveling out once again. But when you take out gasoline and the used cars, you're looking down here and it's all very, very, very low increases. So that is very good. So if it wasn't for these two here, we would have had a very low inflation data come in, and that is very positive when you look a little bit further in here. But when you look here at the moment, I mean, ultimately, the question is, we have now entered the 4% range. We are now only 2% off the target range, what we are happy with. To get into the 2% inflation data, that's not that long. And ultimately, you're looking here and going, when are we going to hit 3%? You know, a few people were guessing about if we were going to hit 3% this year, and we are going to hit 3%. The big question now is, are we going to hit 3% before summer? And then the next question is, are we going to hit 2%? Now, no one thought we could get from here to 2% this year, but it's going to happen. The question is, are we going to see that maybe December, November, October? So everyone's going to be excited about what inflation is going to come down to. Now, considering that we're talking about potentially entering 2% in this year, and there wasn't many people predicting that at the start of the year, I remember at the start of the year I made some predictions, and I said that we would get to 3% and we could potentially see 2%, and we more than likely will hit 2% this year. When you look at the markets today, let's have a quick look at the markets together. So if we go in the US, the Dow Jones is actually down 0.4%. The S&P is actually only up 0.07%. The Nasdaq is a little bit higher, up at 0.59%, but not obviously a great day. So you're looking at this here thinking, well, inflation has rapidly dropped again. It's coming at lower than expected, and it's looking like we are going to hit that 3% and potentially 2% really soon. So why is the market no longer getting excited about inflation data? Well, if you remember correctly, inflation data everyone used to get excited about because everyone used to look at the inflation data and go, oh, is the Fed going to start pivoting? And if the Fed, this was the main issue around inflation. Inflation was the main issue why we saw, the energy boom, the oil prices, the Ukraine-Russia situation that caused a lot of this inflation. When you take out that situation and the main cause of it, once that's all gone, you'd think we'd be moving into a bit more of a positive direction. And why now is the main issue being resolved, but yet the market isn't getting excited about it? If you remember, inflation data used to come in and it used to be lower than expected. The market would get all excited about it. Why is that not happening now? Well, a lot of it's to do with this guy, Jerome Powell. Jerome Powell is out to cause a recession. He's out to cause a stock market crash, and he generally doesn't know what he's doing. He doesn't know what he's doing at the moment, and he is going to cause a recession at the moment, and that's what everyone's fearing. So even though the data is positive, no one has confidence in Jerome Powell to do the right thing. And if you look here, Jerome Powell has now got the lowest public confidence for a Fed chairman on record. That is where we're at now. No one has confidence for Jerome Powell to do the right thing. even though inflation is dropping, even though inflation is only going to be a couple of months from 3% away, even though it's only going to be 2% by the end of the year, no one has confidence now for Jerome Powell to do the right thing. And the inflation data can basically come in what it wants now. But it's not going to cause the market to rally because no one trusts Jerome Powell to make the right decision. Now, we have a meeting on the 14th of June. And by that time, we'll actually get the next set of inflation data out, which will be on the 13th. So by then, we'll have another set of inflation data out. But even when we get the next set of inflation data out, no one trusts Jerome Powell to pivot and do the right thing and stop increasing interest rates. Now, it might not be too late. If he stops pausing now, we might still be safe and avoid a stock market crash and avoid a recession. But people think he's still going to be hiking up the interest rates and hold the interest rates at very high interest rates. And that will cause, eventually, that will catch up. Even though the economy has survived for this long, it will catch up with the economy and it will crash the economy and crash the stock market. And the reason why at the moment is inflation is coming down. The Fed cannot get to the point where inflation comes down, and then gets to 2% and stop. Because it's too late. Because if you stop at 2%, these interest rates don't start kicking in until longer term. So even though you get to 2%, if you've been hiking up the interest rates or holding the interest rates up to the 2% mark, then it's not suddenly going to get to 2% and stop. It's going to go lower because the economy is slowing down. We're going to start hitting deflation. You start having a recession, oil prices are going to come down, and then you are going to have deflation caused by these negative interest rates causing a recession. You cannot stop at the brick wall and stop there. You have to start breaking before the brick wall. You've got to start planning ahead. This is what the Fed have been absolutely terrible at doing. If you look at the CV situation, look at how we were looking at the economy and you're going, this actually isn't that much of a major issue that we thought it was going to be. We thought this was going to be, the Black Death all over again. We thought this was going to be, world shutting for 2 years. After the CV situation, after 3 or 4 months, you're looking going and thinking, you know what, we can open back up again and actually start operating. Many people have cut back on the expenses. Many people are not travelling to work, so that saved them a lot of money. They've got all this sudden, everyone's working from home. Everyone's all suddenly got this free cash to, go out and spend it all on online or what have you. Or the people that still have to work are still doing their essential work. It wasn't that major of a crushing factor for the economy, and the Fed were really slow to realise that, and also keeping interest rates at too low levels. We saw the Fed in a very strong economy keep interest rates at crazy low levels when they should have been increasing them, and they did that wrong. And the Fed has been always very slow to react, going very one extreme to the other end, and that's what's happening once again. They still don't learn the lesson. They're not learning the lesson that inflation has come down, inflation is dead and dying, yet they still push on with the interest rates without realising that's it now. They've done the job. They can sit back and pause and make sure the job is complete now, instead of pushing further and further where it will cause a recession and then we'll hit deflation. And that's why the markets can't get excited, and the markets aren't getting excited off inflation data that much, because they're thinking, yeah, inflation data is good, but we knew that. What we need is this guy that holds the cards that we don't have confidence in to do the right thing now, and we're not getting excited, because what's there to get excited about? Because we're going off his track record. His track record from his leaked interview is that he wants to cause a recession. He wants interest rates to keep going higher and higher, and he will keep doing that. So there's no point getting excited at the moment, and that's the major issue at the moment. So yeah, good inflation data, but what do we have to get excited about? Because we know it's coming down. It's exceeded expectations once again, just like how it did last month. But why get excited? Last month we came in crazy low, a crazy drop, and what happened? Still no pivot. So that's the issue at the moment. So that's where we're at anyway. So I hope you enjoyed it. Hope you enjoyed the talk about the inflation data and talking about Jerome Powell and how he wants to once again do the wrong decision and cause more pain for the US economy at the moment. But we'll see what happens. Hopefully he makes the right decision before it's too late, but we'll leave that until when is the next meeting? 13th and 14th of June. So we'll see what happens then. Hope you enjoyed the video as always, guys. Catch you in a bit.